Hi, everyone. I would like to talk about the financial analysis of Elta Beauty today. But before I start, I would like to ask all of the girls in our class, where do you usually shop for cosmetic or skincare products? For me, it would be Sephora. But did you know that the major competitor of Sephora is a beauty retailer called Elta Beauty? So Elta Beauty has a really popular slogan. It's called All Things Beauty, all in one place. So let's look at Elta Beauty at a glance. Currently, they are the largest beauty retailer in the US. They were founded back in 1989. Currently, they has over 1,196 stores in the US, and each of the stores has over 10,000 square feet. So it's really huge. And they carry over 500 brands, ranging from like lower price point affordable brands you would normally find at a drugstore, all the way to premium brands like YSL and Chanel. And they have two unique selling points. First one is that they offer a in-store beauty salon service. So you basically can just book an appointment online and you can go to their store to get your makeup and hair done. And the second unique selling point is that they have a really exceptional loyalty program. So for any of the points that a customer earned from their previous purchase history, those points can actually be redeemed as like a cashback towards their next orders. However, for Sephora, their loyalty programs, it's not as good as Elta. So for Sephora, customers can only redeem the points that they earn as a gift sets or samples. So these two unique selling points that Elta has really differentiated themselves from the other competitors. So if we look at the business overview, you can see that the net sales are growing at a decreasing rate. So as you can see here, the bar kind of like trimming down from 2017 to 2020. And I also included the net sales of 2021 because their fiscal year ended on February. So as you can see here, from they were hit hard by the COVID, the year-over-year net sales rate would decrease by 16.84%. And then if we look at the number of stores from 2017 to 2020, they are actually expanding. They are opening more stores, but they are opening the stores at a decreasing rate as well. So as I show in this chart, it's downward sloping. And if we look at the liabilities to assets ratio, we can see that this ratio is really high due to they have a really large fixed investments, because before COVID and most of the sales heavily rely on brick and mortar stores. So they have a really high investment on the property lease. And then if you look at the key ratio, the current ratio significantly dropped in 2020 because of COVID. And if we look at the quick ratio, it's increasing from 2019 to 2020. Moving on to looking at their gross margin. So their gross margin are pretty consistent from 2018 to 2020. However, if we compare that to the beauty retail industry standard, they are not doing very great. We can see here, they are, on average, they are 20% less in terms of gross margin percentage compared to the industry standard. But if we look at the inventory turnover, they are doing pretty well. So in 2018 and 2020, we can see that the inventory turnover is much more higher than the industry standard. I think it's largely because Elta Beauty has a lot of promotion year round, so that really helped them to sell their inventories at a fast pace. But if we look at their return on equity, their return on equity is not good. From 2019 to 2020, it's compared to their competitor, Estee Lauder, they are 40%, almost 40% less than the ROE of Estee Lauder. So indicating they are not very efficient on generating revenue with from their shareholders' equity. So if looking at the stock analysis, so we can see here the PE ratio, it's lower than Estee Lauder PE ratio. And if we look at the earning per share, the earning per share is actually doing pretty good. It's almost 6 times higher than their competitor Estee Lauder. If we look at the beta is in 2019 and 2020, the beta is above 1, meaning that their stock moves faster than the market, and it fluctuates a lot. If we look at this trend from 2017 to 2021, so it moves up and down. And compared to that of Estee Lauder's stock, it's moving at a upward sloping direction. So the e-commerce growth, because like 2020 is a hard year for all of the brands in the US or like worldwide. According to the news, Elta Beauty gains 200% increase in Q2 2020 in their online sales. Because I come from a marketing background, so I do a quick analysis on their social media strategy. So we can see here, Sephora currently has over 20 million followers, but Elta Beauty, it's relatively slow compared to that of Sephora. They only have 6.8 million followers. And if we look at the contents that they post, Elta Beauty's posts, as the contents are not consistent and they are not elevated. However, if we look at Sephora, you can see the content are more consistent and it's highly engaged and they look pretty elevated. So you can see here they have a really high engagement rate. So I think Elta Beauty definitely has to improve on their online strategy. So in conclusion, generally, Elta Beauty has a slow growth and they have a low profitability. And like I mentioned earlier, they are not reacting very fast on the online e-commerce trend. So in conclusion, I would not recommend I would not recommend anyone to buy their stock. So that's my finding. Hope you enjoy it.